Walmart, the world's largest retailer, is issuing a new warning today, warning the company will have to raise prices due to President Trump's tariffs.
Tonight, President Trump is warning Walmart against raising prices, telling the nation's biggest retailer and grocer to, quote, eat the tariffs.
The tariffs of 30% on China, 10% on the rest of the world, on top of whatever was existing already, is massive. It is extreme. And right now, the stock market is trading literally as if none of these tariffs exist, back to the way it traded before anything was even announced. But the reality of it is, of course, is prices are going up and some items are not being restocked.
You're going to have price increases soon. You're going to have empty shelves in a lot of our stores.
Like in 2 weeks.
Like in 2 weeks.
Are you prepared to spend 80% more for a USB-C cable? Regrettably, Walmart, Target, and other large retailers have chosen to begin substantially increasing the cost of thousands of imported items. Naturally, our wages are not rising substantially as well. Therefore, our quality of life is going to decline. We exist at a moment when 70% of Americans are already experiencing more financial pressure than they have ever encountered before. And now, major corporations are going to be striking us with a wave of massive price increases. If costs of many imported items rise by 5 or 10%, we could manage that, but evidently Target is going overboard with their price increases. For instance, it is being documented that the cost of one well-known USB-C cable is being raised by 80%. Now, thanks to insider information from Target workers, the extent of the raises are becoming apparent. Staff say it's just the beginning. A $9.99 USB-C cord from the store's in-house Heyday brand is now ringing up at $17.99, according to a self-identified employee on Reddit. It's happening, the worker wrote, sharing a photo of the price tag update. All of Heyday is going up. Really? Did Target truly need to take this action? And Target CEO Brian Cornell started warning customers during a March earnings call when the U.S. was staring down potential 25% tariffs on Mexican and Canadian products. At the time, he warned that everyday grocery items that frequently cross borders before making their way to Target's aisles, like strawberries, avocados, bananas, and coffee beans, were set to increase. If there's a 25% tariffs, those prices will go up, he said. What's being missed is that even a small adjustment in tariffs can cascade through complete global supply networks. A USB-C cable might be manufactured in Vietnam, but the copper could originate from Chile, the plastic housing from China, and the packaging produced in Mexico. Once tariffs affect even one of these components, the final cost escalates, often excessively. Naturally, Target is not the only large retailer that is increasing costs. Last week, Walmart CFO John David Rainey told CNBC that customers should expect price increases towards the tail end of this month, and then certainly much more in June. Tariffs are still too high, even with the recently announced agreement to lower duties on imports from China to 30% just for 90 days. He said, "We're wired for everyday low prices, but the magnitude of these increases is more than any retailer can absorb. And so I'm concerned," he said, "that consumers are going to start seeing higher prices. You'll begin to see that likely towards the tail end of this month, and then certainly much more in June." And here's what makes this situation even more concerning. Many of these businesses have already deployed shrinkflation strategies, quietly decreasing the size or weight of items while maintaining the prices the same. Now, they're adding outright price hikes on top of that. We're spending more, we're receiving less, we're witnessing our salaries remain flat in real time. Now, when President Trump learned about this, he went ballistic. After Walmart last week said it would have to jack up some prices because of high costs of the global trade war, he responded forcefully in a Truth Social post, demanding Walmart reverse its decision. Walmart should stop trying to blame tariffs as the reason for raising prices throughout the chain, Trump said. Between Walmart and China, they should, as is said, eat the tariffs and not charge valued customers anything in capital letters. I'll be watching, and so will your customers! Triple exclamation marks. Trump believes that Walmart should be able to absorb the tariffs since the company is making so much money. But it's also been pointed out that Walmart's margins are very thin. Trump posted on social media on Saturday, Walmart made billions of dollars last year, far more than expected. Well, that's accurate. Walmart is America's biggest retailer and had a strong 2024 on the back of inflation-weary customers seeking out its notoriously low prices. But Walmart's profit is a function of its massive scale rather than artificially high prices. As a percentage of sales, Walmart's operating income last quarter was just a little over 4%. Its net profit margin was less than 3%. That's razor thin by business standards. This highlights a more fundamental issue. Corporate behemoths like Walmart function on volume, not premium markups. When operating margins are this narrow, any external disruption, like a tariff or fuel cost surge, must be transferred to the consumer. Otherwise, it could eliminate entire quarters of profit. When I went to a local Walmart recently, I was shocked by how dramatically prices have shifted. And if Walmart CFO John David Rainey is speaking accurately, the price increases that we have witnessed so far are just the start. It's not just about food or electronics any longer. Everything from pet supplies to school materials to basic personal care items is climbing in price. In fact, a recent analysis by the American Institute of Consumer Economics discovered that the average American household now pays 11% more on essential products compared to just 1 year ago. And before you say, well, what about inflation? That figure is even after accounting for inflation. Regrettably, the reality is that costs are climbing to ridiculous heights just about everywhere. One father in Florida recently made news all over the globe when he disclosed he spent $1,400 to take his family of 4 to Disney World for a single day. Greg Stowells took his 3 kids and his wife to the self-proclaimed happiest place on earth in Orlando while family was in town visiting them, but he quickly found out just how deep the one-day trip was going to hit his pocket. He said it started with the ticket purchase, and then it ran right into the parking, and then it was just like a cash cow for the rest of the day. Amusement parks, fast food establishments, and even discount stores, all previously considered budget-friendly escapes or necessities, have increased prices in sync with broader economic uncertainty. It's as though the entire pricing structure is expanding together, leaving no affordable refuge for those struggling families everywhere. I recall my parents bringing me to Disney World when I was young, but nowadays, only the affluent can afford to bring their children to our ridiculously expensive theme parks. Most of the nation is just trying to discover a way to get by financially from month to month. Consumer sentiment just fell to the second lowest level ever recorded, and the rising cost of living was the biggest reason for the drop. United States consumers are becoming increasingly worried that tariffs will lead to higher inflation, and that's according to a University of Michigan survey released Friday. The index of consumer sentiment dropped to 50.8, that's down from 52.2 in April, in the preliminary reading for May. That is the second lowest reading on record behind June 2022. The outlook for price changes also moved in the wrong direction. Year-ahead inflation expectations rose to 7.3% from 6.5% last month, while long-term inflation expectations ticked up to 4.6% from 4.4%. It's important to remember consumer sentiment isn't merely an emotional measure. It forecasts behavior. When people feel hopeless, guess what happens? They stop purchasing, which then triggers even deeper slowdowns across retail, across hospitality, and deeper slowdowns in manufacturing. The economy is balancing not only on financial foundations, but also psychological ones. You know, what many consumers don't understand is that these price increases often extend far beyond the displayed sticker. Walmart and Target have also discreetly modified product selections to smaller sizes and lower quality alternatives, meaning you're often spending more for less. This approach is known as premiumization, and it involves eliminating budget options and steering customers toward higher-priced items with only minor improvements, if any. For instance, certain cleaning products and pantry essentials that used to be available in economy bulk packages are now only sold in smaller, more expensive units. Have you noticed this? At Target, even store-brand products like Good and Gather or Up and Up have experienced subtle downsizing, while their prices rise simultaneously. These modifications are so incremental that most shoppers don't even realize. Oh no, not until their weekly grocery bill suddenly feels double what it was a year ago. When costs increase and product value decreases at the same time, it creates a concealed tax on daily life. And the people who experience it most are those already surviving paycheck to paycheck. Just consider, if retailers were already implementing this when tariffs were lower, what's going to occur now that trade barriers are rising again? If they discreetly reduced packages, increased prices, and lowered product quality before, how far will they push now? Look, this isn't just a temporary adjustment. It is the new reality, and it's only going to intensify. We're not just spending more, we're being trained to accept less. The next time you walk through a Target or Walmart aisle, ask yourself, how much of what I'm spending is the product? And how much is the concealed cost of a broken system? After 4 years of consistently rising costs, we really are confronting a historic economic crisis. Unfortunately, it appears that prices are just going to keep climbing even higher. I wish that I could tell you that there's an easy way out of this mess, but I cannot do that. We are all just gonna have to find ways to tighten our belts even more, because the purchasing power of our dollars is just gonna continue to go down. Here at Epic Economist, we'd like you to share your stories with us. We look forward to reading your comments. Please subscribe, and here's to the next time. And thank you very much for watching.